Good afternoon, everyone. I'd like to call the meeting of the Frederick County School Board's Finance Committee meeting to order. Time now is 5:30 p.m. And we have we have an agenda before us. How would the board like to proceed?
Madam Chair, I move that we approve tonight's agenda for the Finance Committee meeting.
I second.
All right, we have a motion to approve the agenda presented before us. It's been properly seconded. Any discussion? Seeing no discussion, all those in favor signify by saying aye.
Aye.
Aye. Any opposed? Motion passes. Dr. Hummer, I'll turn it over to you and your team to present to us this evening.
Thank you so much, Madam Chair. So we have 6 items for you this evening. Of those 6, 2 of them we are going to ask that you move to the full board for approval, and it's the first 2 items on the agenda. It's a contract award for the USA Produce and Seafood, as well as the Food Service LLC Kenny Produce and Gourmet, which we'll talk about here in a second, as well as the VPSA Educational Technology Fund resolution for FY 2025. We're also going to discuss a finance department overview. So we're going to provide a very in-depth overview of all of the finances and aspects of financing here in Frederick County Public Schools, and we're going to provide you that, as well as answer any questions that you might have, as well as accounting and budgeting responsibilities. We're getting ready to embark on another journey of developing the budget for FY 26, which we're all very, very excited about. So we want to provide you with some very preliminary information in regards to that, and then, of course, we're going to dive into that more deeply on October 25th for our retreat. And then we actually have some team members from the finance department that we're going to introduce you to, and they have some items they're going to share with you as well. So with that, I'm going to hand it over to Mrs. Camry and Mrs. Anderson. Thank you.
All right, so as Dr. Hummer said, we're going to start it off with contract awards. Staff recommends contract awards for fresh produce. One to USA Produce and Seafood, Inc. in the amount of $150,309.90 estimated, as well as a contracted award to PJK Food Service, LLC, doing business as Kenny Produce and Gourmet, for $114,404.89. These award recommendations are being made by line item as allowed for in the bid documents. They were the lowest bid on those line items. So if there are no questions, we would like that you make a recommendation to forward this to the full board.
All right, and just to clarify a little bit too, I know you said it, but the line items, so these are 2 separate line items. They're both for produce, but that enables us to get even a lower bid, and it makes it more competitive.
Correct.
Okay, and these were, as I'll reiterate, the lowest bids, so thank you for
Yes.
that. Any other?
Are these 2 companies the current contract holders, or is this changing to another vendor?
Okay, USA is the same.
Okay.
The second one, we would need to get back to you on that.
Just curious.
Yeah.
Now, USA Produce and Seafood is local, correct?
That's correct.
Is PJK local as well?
Yeah, we'll have to get back to you on that as well.
Okie dokie.
All right. So we have a recommendation. Would the committee, I should say, like to make a recommendation?
Point of order, maybe. Do we do these individually, together? How do we do this?
If you could do them individually, that would be preferred. On board docs, there is one motion for one and another motion for another.
Okay. So, Madam Chair, if I may, I'd like to make a motion to move to the full board the item A on the slideshow that states award amount $150,309.90 estimated. It's an award to vendor USA Produce and Seafood, Inc. So my motion is to move that to the full board.
Second.
All right, we have a motion on the table. It's been properly seconded. Any discussion? Seeing no discussion, all those in favor signify by saying aye.
Aye.
Aye. Any opposed? Motion passes.
Madam Chair, I would also like to make that same motion, motion to move to the full board the award amount of $114,404.89 to the vendor PJK Food Service, LLC, DBA, Kenny Produce and Gourmet. So again, this motion is to move this to the full board.
Second.
We have a motion on the table. It's been properly seconded. Any discussion? Seeing no discussion, all those in favor signify by saying aye.
Aye.
Aye. Any opposed? Motion passes.
All right, thank you. So we'll move on to the next item on our agenda, which is the VPSA Educational Technology Funds. As part of the Educational Technology Grant Initiative, the General Assembly continues to allocate $544,000 to Frederick County Public Schools and $26,000 to NREP. These amounts are included in this school year's budget. The resolution we are requesting allows us to spend the funds now, but then reimburse ourselves later when the funds become available in the spring. Funds will be used for acceptable purchases, as you can see on the slide, for networking equipment, Chromebooks, and laptops. And if there are no questions, we are asking that you make the recommendation to forward this resolution to the full board for approval.
So just to clarify a few things for those in the gallery as well as those that might be watching and for any of us up here as well. The VSPA or VPSA funds, those funds come from the sale of school bonds at the state level. And these funding numbers that we are seeing here are from those bonds. And the reason we want to spend them now as opposed to wait is because it's very difficult to spend all of that money by the end of our fiscal year.
That is correct.
All right, excellent. Thank you.
Madam Chair, I would like to make a motion to move to the full board the resolution that allows for FCPS to spend the funds now that we receive from VPSA and reimburse ourselves in April when the funds are received.
Second.
All right, we have a motion on the floor. It's been properly seconded. Any discussion? Seeing no discussion, all those in favor signify by saying aye.
Aye.
Aye. Any opposed? Motion passes.
All right, thank you. So now this brings us to the part of our presentation where we want to provide you an overview of some of the activities that go on in our finance department. As you can see on this slide, the 4 overarching functions of our finance department are accounting, budget, payroll, and purchasing. But our presentation tonight is going to focus on the accounting and budgeting aspects of our department. Here's just another way to look at our responsibilities in our finance world. It all starts with our financial plan, which is the budget. As Dr. Hummer said, you'll be starting soon. And then it's a process of managing the inflow of money that we receive, as well as managing the outflow of that same money. And then, of course, ultimately to report to our stakeholders, as well as to independent auditors. Here are some of the attributes that we have and that we look for in a strong finance team. They're not in any particular order, but I think it describes us fairly. And as people often like to refer to us as numbers people, that's not entirely true. We are numbers people, but we do have a lot of care and compassion as well. And as you can see on the graph here to the right, like teachers, there's a shortage of accountants. That has a lot to do with the educational requirements that go along with the position. So before we get into, we're going to start going into the accounting side, I want to introduce 2 of our teammates. We have Cheryl Anderson, who is a finance analyst, and we are happy to have her here tonight. She will be sharing part of this presentation, as well as Lisa Reed, who is one of our accountants on staff. We also have 2 other teammates who unfortunately couldn't be here tonight. That's Laurie Smith, who's an accountant, and Melissa McCauley, who is a finance analyst. So I am happy to turn this over to Lisa Reed.
Thank you. What is fund accounting? The accounting function of the finance team tracks the financial resources for specific purposes, ensuring transparency, accountability, and compliance in our processes. The fund accounting system is used in nonprofit accounting. It is different from for-profit accounting in that its purpose is to stay accountable to contributors and donors, opposed to maximizing earnings, and it is exempt from income and sales taxes in many cases. The finance team tracks the resources in 12 separate financial funds for governmental activities. This is where you have the most control of how funds are allocated. Fiduciary activities and business type or internal service activities such as selling fuel to government agencies. Funds are then also categorized into unrestricted, which is like your general spending money, restricted, which is like grant monies for student scholarships from donors, and permanently restricted is like a trust fund. Now on this slide, you'll see an illustration of the 12 financial funds that the finance team oversees. The middle portion of this slide is the governmental funds, which is where the board has the most control of how funds are allocated, as they are primarily funded through taxpayer dollars. Our financial team is budgeting and tracking actual income within 12 financial funds and 710 individual revenue accounts, as well as assigning costs or expenses within the 12 financial funds and 15,630 individual expenditure accounts. Each month, our team is generating financial reports to be transparent to our public. These reports go to our school board. They're also posted on our website. This financial reporting also is a measure. It allows us to help measure the financial performances of each fund related to the budget. Our financial team is involved with continuous learning, and we exercise prudence in our judgments because our work is highly regulated. In examining each account, we ensure all accounts adhere to generally accepted accounting principles, and we ensure all transactions have evidence and relevance.
Just a quick comment, just for some terminology clarification. The GAP, the Generally Accepted Accounting Principles. I think I hear that that abbreviation in my dreams at night, in nightmares from MBA school. So just so for our folks watching, the GAP principles are not just something that's found in a governmental entity as far as accounting goes. It's not something found in a nonprofit. That's what pretty much, well, I believe I can safely say every corporation in the United States uses GAAP principles, because if they didn't, when they're audited, and they inevitably are, they would not be in compliance federally for even a private company. So this is $330 billion business that Frederick County Public Schools is. So it's very important to note that we still follow all of the principles that a for-profit entity would be following. So.
Thank you. Did you move on to the next one? Did I skip one? Okay. All right. On this slide, you will see this number to the side. We have over 15,000 journals of transactions that are reviewed and posted to our accounts. We use a modern accounting system recording these journals and transactions. Each individual account contains a budget, actual expenses, encumbrances, which are an allocation of funds. This is resulting in what you will see down at near the bottom of this slide, which is the remaining budget balance. Each account is reconciled and closed each month for reporting purposes.
And Ms. Reed, if I could just mention something here too. Just wanted to call everyone's attention to the top line on the right. Yes. Okay. So top right, it says account, and then there's this mass of numbers. So that would be one of the 15,000 journals of transactions. So why is that important? So each one of those numbers has a meaning, and each one of those meanings has a source. So for example, Sherando High School teacher salaries in the history department would have a code and a number attached to it. So the reason I bring this up is many people in the community are asking for the line item budget. So, and they look at this number and they go, well, I don't know what that is. Well, nor did I before I asked the question. So one thing that I've tasked this team with, and they've done a massively amazing job with it, is in this year's budget document for the operating budget, you will find in the back an index of all these funds. So you can, or all of these accounts. accounting codes. So you can see exactly where each code is, where each dollar is spent, under which fund and which account. And there's a breakout of that. So thank you all very much for doing that. And also, too, I learned something in my pre-brief for this meeting as well. Every time that there is a new allocation, let's say that a substitute or that a teacher wants to use more, let's say purchase more paper, for example, that would create an entirely new code. So this is tracked to the dollar, and this is just proof of that tracking. So thank you all for deciphering that code for us lay people who are not the accounting types.
Thank you. And we're going to discuss that a little bit on this next slide. This indicates the chart of accounts and exactly how they are set up and how this segment is composed of different meaning. It's diagrammed for you sort of here on the left, the bulleted items. That tells you what each of these segments of the account code means. So there are a number of acceptable combinations for not only our purposes, but also for state and for local reporting and costing activities. So management of the chart of accounts does require a quarterly audit so that we ensure reporting integrity. Management also includes a process of inactivating accounts when needed to ensure proper spending controls.
Kind of like a blockchain. Every time a new blockchain is programmed, they add another number to the end.
Sort of.
Got it.
Yep. Financial information provided to the county. Accounts are rolled up and reconciled to the county's general ledger for Frederick County Public Schools. For each Frederick County Public Schools account, there is also a corresponding county account.
Interesting.
I guess
So just to reiterate that, we reconcile it every month
every month
with the county.
with the county.
So they agree with everything that we present, and that we match and ensure that every dollar that comes from the county is accounted for. That's allocated to us every single month.
Every single month.
Fantastic. Thank you.
You're welcome.
So now this takes us into the budget development and financial forecasting responsibilities that happen in our department. So budgeting in a school division is a year-long process. Why is it a year-long process? Because by state code, the superintendent is tasked with presenting a budget based upon the needs of the school division, not necessarily what the funding level allows for, but the need of the school division. So on a statutory basis, here you can see the budget timeline, beginning with the superintendent proposing the budget, and then we hold a public hearing, which by law we need to advertise that public hearing 7 days in advance of that public hearing. At that point, the school board makes the superintendent's budget their proposal, so that they can send it to the county for inclusion in the overall county budget. And that has to be done no later than April 1st by code. The county also holds a public hearing, and then the county board of supervisors, their role is to appropriate the funding for us, and they are tasked with doing that by May 15th or within 30 days of the state budget for school divisions.
And Mrs. Anderson, if I may, just to clarify, this is the operating budget timeline,
That is correct.
not to be confused with the CIP budget timeline.
That is correct.
Okay. And the CIP budget timeline would be the 3 projects that we're hoping to have approved by the Board of Supervisors, which are the 4th High School, the Middletown expansion, the Jordan Springs expansion. Those are on a separate timeline, completely separate and apart from the one we're seeing here.
That is correct.
Excellent. Thank you.
So now here's just another way to look at that calendar from the finance department standpoint. These are the activities that are going on in the finance department leading up to the superintendent's proposal, as well as to your proposal, and then ultimately to the end of the budget process. So you can see that we are doing more than just crunching numbers. We're researching, we're analyzing, we're planning, we're coordinating, we're marketing our budget. and of course, trying our best to educate the public through our Finance Committee meetings. And then over to the far right, once that budget has been adopted and we've started a new school year, we're constantly measuring back to that budget to make sure we stay within budget. Various methods are used to develop our operating budget. There are pros and cons to every method. For example, 100% zero-based budgeting for an organization our size and for the services that we provide to our students, and the fact that 83% of our operating budget goes towards staffing, serving those students, it's not always cost effective to implement 100% zero-based budgeting because it doesn't produce the savings for the cost that it takes to implement it.
Because we would essentially have to ask for more money up front if we went back to zero-based budgeting.
Do you want to take that one? Can you say that again? I'm sorry.
So essentially, we would have to ask for more money from our allocating entities. Should we go back?
Yeah, if we did a zero-based budget, that brings every principal and every director into the table and saying, what are your needs? Because we've wiped the slate clean. And more than likely, pretty 90% sure, they're going to want more than what they have in their budget. So yes, the answer is yes.
Okay. Thank
Because
you,
it
Ms.
would raise our administrative costs to be able to implement something like that.
Got it. Thank you.
So employee salaries and benefits are 83% of our operating budget. So our department starts the budget process in July by benchmarking our salaries to our regional 30-mile Virginia radius. Once we've benchmarked those salaries, it is the basis for starting a salary proposal for inclusion in the superintendent's proposal. We're working with 44 different pay grades, and that's actually been streamlined recently. We have brought that number down. So we're producing multiple salary scenarios to assess the cost, what it would take to provide everybody a cost of living adjustment, as well as what it would cost to implement a competitive salary scales. Our scales are structured and differentiated to value job responsibilities, experience, and education required of the jobs. When targeting one pay group for a significant increase and we have limited funding, we are mindful of its impact on the other pay groups. I'll give you a minute to think about that for a sec to see if there's any questions about that. Okay. Our department is also encumbering salaries and benefits. So what that means is we're doing that monthly to refresh our expected outlay of budgeted funds when it comes to salaries and benefits. This allows for a fair representation of remaining funds on the monthly financial reports that you receive. And then we use predictive data analytics to forecast expenses. We analyze actual salaries and benefits throughout the school year to determine if there are potential savings, whether it be through turnover of an employee or a position that stays vacant for a number of days. We're able to take that information, and if those funds could be used towards another division priority, then that's the process that we would take in which to come to that conclusion. Our team manages the budget for staffing positions. All approved positions and their attributes are recorded in our ERP system in a module called Position Control Management. The Position Control Management feeds the staffing standards and vice versa. All employees are entered into a unique position. Each unique position contains attributes such as the description of the position, the job responsibilities, the location of the position, as well as the pay scale in which it's paid from, and the finance account code to ensure that we stay within budget. So each time an employee changes, there's a change to the system, or any time a position is repurposed, there is a change to this system, as well as generating a budget transfer. Position control data is reconciled monthly to ensure that we always stay within our authorized staffing limits.
You guys sound really busy.
It's fun.
I'm not coming to your house.
So then let's talk about the other piece of the operating pie, which is everything else other than employees, the salaries and benefits that we pay. Our schools are funded a fixed and variable amount in their budget. The variable amount is for supplies, and that varies based on their student enrollment. And departments are funded based on their needs and division needs, and grants obviously are funded based on award notifications and their spending criterias. We do meet with there's 55 total account managers. We meet with every single one, and we're going to start that process here in October. And as part of that discussion, they bring forth both their needs, and at the same time, we also ask them for where things can be saved. So this takes us to budget transfers and amendments because our department is reviewing all of those transfers and amendments that come through. Our ERP system has a control in place to prevent over-obligation of funds. Most of our budget transfers occur when an account manager transfers funds between their accounts. So an example of that is you could have a school principal who wants to move $100 from one grade level for instructional supplies to another grade level because their student enrollment changed. We try our best to budget with great accuracy, but 100% accuracy for the granular level that our account codes are is nearly impossible, but we do try our best. And so that's where the bulk of our budget transfers come from. A budget amendment is when a total fund amount change. So you heard Lisa talk about the 12 different funds that we have, which are like 12 different businesses or entities. When that total fund level change, that's a budget amendment. That requires your approval as well as the Board of Supervisors approval. And we do provide a report to you every month with the financial statements of every budget transfer that occurs for the month.
Mm-hmm.
So we just spent time talking about the uses of funds for the budget. Now we're going to get into the funding side. Standards of quality is how Virginia funds public schools. It's mostly made up of minimum staffing standards for instruction and support services, and you can see some of the examples here on the slides. Costing the SOQ includes base data, such as funded salaries, which is not the same thing as the actual salaries that we pay. This base data is updated every 2 years. State funding can also be updated due to various policy changes, such as the governor having a compensation initiative like the 3% salary increase that he had recently. Costs of the SOQ are then allocated between the state and the locality based on a locality's ability to pay, called as the local composite index. The local composite index, as I just said, splits those costs into the state and local shares, and a locality's ability to pay for education is based on the variables that you see on this slide. And as you can see in the line graph to the right, based upon those variables, our locality is becoming wealthier. So all things being equal, if total SOQ cost doesn't change, all things being equal, as our LCI increases, that means it's less state funding for us. For every 1% change in the LCI, that shifts $1.5 million from the state to the locality before anything else changes.
So to clarify, if I may, just for my own personal, so if the LCI changes, that means the state's giving us less money, correct?
All other things being equal, yes.
And if we say, if the Board of Supervisors decides to lower the tax rate, then that means there's 2 areas where less money is coming into the county, specifically for schools. Am I connecting the right dots? Or is that too much of a stretch? I'm not trying to play politics. I really just want to know.
I think,
Oh, Madam Chair, you go first. I can, yeah.
Mr. Bell, I think it's more of a matter of, it's not so much if they choose to raise or lower, it's just how they choose to allocate whatever pot of money is garnered from that raise or from that lower or from the status quo.
Okay.
And whatever they choose to allocate to us. So it's not rate dependent. This, though, does have a direct impact on how much the state gives
And
us.
so, okay, now I got you. It depends on what they want to allocate to us. So it doesn't matter what their rate is, it's their allocation amount.
That's my understanding.
And if we're getting a little bit ahead of ourselves too, there is a slide coming up where we're going to show how much the county has paid over the years in regards to how much the state has been providing us and how much we went over that minimum. There is a minimum that they have to provide us, and they've gone above that. And we're going to talk about that in a second. But kind of to help clarify this, the higher our LCI is, the less money we get from the state. So as that number increases, that means that's more money the locality has to provide. It's about going above that number because, as we talked about last Wednesday, there are certain aspects of our school division where we are getting the minimum from the state, but we go above that because of the needs that our school division requires.
Okay.
If that makes sense.
And if that number keeps dropping, we're going to continue.
We could
to lean-
potentially have an issue.
We have more of a lien on our constituency if we want to make up the budget shortfall.
Correct.
Gotcha. Thank you.
Just one more follow-up question. So this tracks over time. Does this keep up for, or at least compensate for the hyperinflation that we're seeing in the past couple of years? I mean, is the dollar true across this chronology?
Yeah, so it's 2 years behind, Dr. Erskine. That's a great question. So we do not calculate this number. This is a number that's provided to us from the state, and it's updated every 2 years. So I would say yes, hopefully they do include that, but again, it's 2 years behind. So currently, no, but where we were 2 years ago, yes.
But it's also relative to other localities in the state too.
Correct.
So they're going to see the same increase.
That's very helpful to know. The reason I ask is just because I see that uptick in local quote-unquote wealth, and I wonder just whether we're compensating for that, because not a lot of people feel more wealthy. But I also know that the population's increasing, and that can have a great deal of impact on that.
Well, remember I said that these values, they're weighted, right?
Yes.
So the true value of property has 50% weight in this calculation.
Yeah.
Good question.
So budget development for state revenue, this little graphic that you see to the right, this is 2/3 of the first page of this calc tool that we receive from the state. So we sometimes are rerunning this 4 times because we have 4 different state budget scenarios within a budget cycle. Sometimes there's 5. So we're updating this each time that there's a new scenario, rerunning it for our projected enrollment, and then of course taking those considerations into the overall budget proposal based upon what's coming from these calc tools. So as you can see here on the slide, for the state share of revenue for our operating fund, where those sources come from, and then most of that money comes to us to support the state share of standards of quality. They also provide the state share of lottery-funded and incentive and categorical programs. Those programs are more specifically targeted to certain student population groups, as well as certain incentives such as the compensation increase that the governor's proposed. So let's look at the county side of that. You can see that our county revenues come from real estate and personal property taxes mostly. And then there is that required local effort from the county for the standards of quality, as well as lottery funded and incentive and categorical programs, which we must certify and apply for. But the reality is the county provides us more in funding than what these minimum standards require. And all localities provide more than what is required of the standards of quality. And here's just an illustration of that. Why do localities fund above? Well, because our actual salaries are higher than what is in the funding model through standards of quality, as well as we have more staff than what the SOQ staffing standards call for, because we staff based on our student needs.
How old is the equation used to figure this out?
It's been since the 70s.
Yeah. Lots of change. A lot of things have changed since the 70s.
I haven't.
Yeah.
I'm still the same.
So that just to, this makes my stomach turn. So the calc tool that's used to determine all of this and all of our funding, all of our funding from the state is dated back in the 1970s.
That's correct.
And meanwhile, we've had technology advancements, we've had student needs increase, so just scratching the surface of things that have changed. I think I want to pen an email to Dolores and Timmy and Bill and say, well, can we have legislative priority number 6?
Yeah.
Maybe even moved up to number 1 and get this calc tool retooled. Not sure whose swim lane, if you will, that sits in. I venture to guess it's somewhere down in Richmond, but anyway, 1970s calc tool to determine all this. Interesting. Thank you.
And
The
to put
LCI
this
dates
into
back to that.
perspective, they were probably listening to Foghat on an 8-track player.
Who's Foghat?
Exactly. He's just his education is so lacking.
Just a follow-up question. So, so I wasn't born yet, and I'm just trying to wrap my head around this. This was lottery diversion of funds into state education, if I remember correctly. So we were told then, I've read about it in a history book, we were told that those funds were supposed to supplement and not supplant funding from the state. I'm sure that's going to happen anytime now, but I would definitely echo the comment from Mrs. Klein about the need for updating that perhaps into a new century.
Dr. Erskine, can you say that one more time? This was pre-lottery, I believe you said allocate, or pre-lottery.
Yeah, so this would have been set before state statutes on lottery diversion. So the funds from the lottery, when we were told it was supposed to supplement state funding to education and not supplant it, but that hasn't happened. So I'm just wondering when that change is coming. That's a great question, though, that we could ask those representatives.
Yes, definitely. Thank you.
I'd like to provide a clarification. I know the LCI dates back to the 1970s. Patty, do you know when the SOQ dates back to? Oh, no. Yeah. No, I do want to provide that
Okay.
point of clarity. The LCI dates back to the 1970s. Yes.
Got it. Okay.
Yeah.
Do you know off the top of your head if there's been any indication of people looking at the LCI to see if they can update it? Is that on anybody's?
Yes, great question, Mr. Bell. As I mentioned last week, there has been conversations at the state level. That is why I've urged our local delegates and senator to please include us in those conversations, because they're currently talking about how they're going to update the calc tool and the LCI, because all of that is, and the SOQ, that's all together, because that's all part of one formula. So hopefully they will include us in those conversations so that we can work towards a better formula tool that aligns with, quite honestly, the rest of the nation. I think we're one of 6 or 7 schools, states that does not use a student need funding formula, and that's through a JLARC document that I shared with you all, and I can reshare it if you'd like, but that was the JLARC document that clearly outlines that we are behind as a state, as the Commonwealth, Virginia.
Sure.
Yeah. So hopefully they will continue to work towards a better funding formula, as Dr. Erskine and all of you have stated.
Thank you. That's ridiculous.
All right, so now I'm going to turn it over to my esteemed colleague, Cheryl Anderson, and she's going to walk you through our responsibilities related to revenue and accounts receivable.
Thank you. As we look over the information on the slide, remember that revenue is income and accounts receivable is recording an amount that is owed to us before the money is received. Our team receives and posts approximately $350 million in revenue from various sources. We deposit and record cash receipts and electronic transfers daily from state, federal, and local sources for all financial funds. We invoice for vehicle services, We invoice for fueling activities for 37 agencies monthly. We invoice for interfund activities. We submit school nutrition meal data monthly for federal reimbursement. And we verify and accrue grant reimbursements. Revenue is mostly received through electronic data interface, or EDIs. Some revenue is received by checks, and we do actually get some in cash. Our team follows proper internal controls to mitigate the opportunity for theft. Our team is invoicing for various activities as shown on the slide. Some of the invoices go to outside agencies for payment, and some are invoiced to our internal financial funds. Next, we'll take a look at grant management. The Finance Department manages the finances of 96 local, state, and federal grants, totaling approximately $17 million. Grant funds support student instruction, professional learning for teachers, student support services, special instructional services, technology, and safety and security by funding personnel needs, services, and materials. We verify acceptable uses of funds, ensure grant managers meet all timelines, and plan for the future if and when the grant funds expire. Some grants that we receive require a local match. So for example, if we are awarded $5,000 in grant funds and there is a required 15% local match, the division would fund $750 on top of the $5,000 out of division's local funds. When purchases are made using grant funds, we follow the same purchasing regulations as we would when making purchases using general funds. Significant time and effort go into the management of grant funds on the part of the Finance Department and also the grant managers and their administrative assistants. Some grants are for multi-year time periods, and some are just for a specific time period or purpose. When the grants cover a multi-year period, we do consider grants funds when budgeting for upcoming years. When you think of grant funding, you may think that the funding is received up front and then the spending begins, but that's not always the case. For example, when we are awarded most federal grants, we receive the award notification and can start spending, but reimbursements must be submitted for us to receive the funds from the grantor. The spending is done first using division local funds, and then we are reimbursed. Required reimbursements are done on a monthly basis. Lastly, at the end of the fiscal year, we ensure that all grant revenue matches grant expenditures, and we prepare for the upcoming next fiscal year.
Our team also handles major school construction financing.
I'm sorry, Madam Chair, if I may, can we go back to the last slide, please? I have a question. With respect to the funds that, the 96 grants that we oversee, or you oversee, not we, you. You all have to do a report on each of those, correct, to satisfy the grant requirements? Do they require reports?
Some grantors do require reports. Some they require just an annual. Once the grant award period has ended, they'll require a report. Some want to have a quarterly report. A lot of the grants that we work with, they have an application process. So
Right.
as long as the spending and the purchases follow those
The plan.
that plan, then there's no reporting requirement.
I see. And, my question is, for those grants that do require reporting, whether it be at the end of the year or quarterly or what have you, are they made public? Are people able to access them publicly?
If they request it, yes.
If they request
If they
it.
request
Okay, thank you.
Most of our grants are from the federal government, so there's a lot of monitoring that goes on.
Oh, yeah.
Yeah.
Thank you.
So I think Patty gave you a presentation not too long ago about how we finance school construction. So our team is responsible for that. We work closely with the construction team to determine when we need to apply for general obligation bonds. We have access to that bond market twice a year in the spring and the fall through the Virginia Public School Authority when we have active major construction on the books. Our team is responsible for projecting cash flow needs each time we apply for bonds. So I think if you recall Patty's presentation, when you've got a large project, you're not applying for all the bonds up front. You're doing it throughout the life of the construction project. Applying for bonds consists of us working with Virginia Treasury, Bond Counsel, as well as county administration. When bonds are approved and the cash is received, our team is responsible for obviously handling the accounting of those funds and then making sure that those funds are being used timely for their purpose so as to not earn a profit on the money that we borrow. Our team also supports the capital improvement plan by forecasting the impact to our debt service as well as operational needs in the future. And I think that was it. That's all I wanted to say there. So the last section of our presentation tonight focuses on transparency. The financial reports that we provide that are produced and kept on our website, as well as give you some examples of key financial performance indicators that we're looking at on an annual basis. So here's just a screenshot of 3 budgeting documents that we publish in our department. The first of which is a detailed budget of the superintendent's budget. The capital asset plan, we're working closely with the facilities department to execute that document. And it is being expanded to include the school nutrition program, as well as information technology and transportation. And then the last one, I think at our last finance committee meeting, we gave you a quick tutorial of our budget document that is on our website. So these documents serve both a short-term purpose to help establish the budget for the upcoming year, as well as give you a 3-year forecast of what our operations look like. Here are some more financial statements that we provide. The one to the left is the monthly financial report that you receive. With that report includes all the budget transfers that we talked about, as well as any contracts that are $100,000 or greater. The middle report we just walked you through last finance committee. That was a year-end financials that not only provides the numbers, but also a narrative to go with and help explain the variances to our budget. And then the last screenshot to the right that you see is page 1 of 70. We provide that to the state every year of all of our financial data. All school divisions provide this. And what this does is it helps build the SOQ in future years.
What about Dr. Hummer's secret set of books?
Haven't found it.
Because it doesn't exist. For the record, Madam Chair.
70 pages. Wow.
70 pages, yes.
That's incredible.
Yeah,
Yikes.
yeah.
And how many people are in your department?
We have 13 people in total in our department, but remember our department has 4 major functions: accounting, budgeting, purchasing, and payroll.
So 13 people to cover 4 major facets of budgeting, plus producing all these documents and making sure that every dollar is allocated. And additionally, I think you articulated it very well, Mrs. Anderson. I'm going to put you on the spot here. In the last Finance Committee meeting, you put it in perspective. You said that if a family were to budget like we do, so we are $333 billion business. And if a family, average family in Frederick County were to budget the way that we did, they would have $100 left over, I believe is what you said. Is that correct?
Yeah, but I want to give the credit to Mrs. Camry because she came up with that.
Sorry, Ms. Cameron, thank you. Thank you. So that's quite a slim margin. So interesting, thank you.
Yeah.
Just one quick comment based on what I'm seeing. This is my first time going through some of these reports and really understanding where this money is spent. One of the things that I've learned in just the past couple of months is that the extraordinary level of detail that is available to the average citizen is daunting. Not that I wouldn't love to sit at home and read this as a taxpayer, but the only thing I think I haven't seen maybe is like the color of the crayons. That level of detail might be missing. Other than that, I don't know what possible tracking could not be done that you guys are already doing, and thank you for that. I have a great deal of respect for what you do, mostly because it scares me, and secondarily because of the amount of work and labor that I know goes into what you do.
Thank you for saying that.
Yeah.
I also think it's just an interesting point of note, the way that you all have to budget our money and allocate and account for it. Many entities have what's called a contingency fund, whether it's a for-profit business or even a family, personal finance, and other nonprofit businesses, as well as governmental entities such as the Board of Supervisors has a contingency fund that they can lean on. Do we have a contingency fund?
We do not.
We don't. Yeah, didn't think so. Didn't think I saw that in all these pages of documents. Thank you.
So now I want to get into to give you some examples of those financial key performance indicators that we look at on an annual basis. So we talked about standards of quality earlier, and we talked about how the cost of the standards of quality is shared between the state and the locality based upon a locality's wealth. Here is a measure of how much the locality is funding above the standards of quality. And remember, all localities are funding above the standards of quality. So you can see here in FY24 that percentage above is coming down compared to the years before that. So in order for that to come down, that means that there were some improvements to the standard of quality and inflation going on the operational costs. Anytime that happens, it raises the overall cost of the standards of quality, therefore raising our local required effort.
So, Madam Chair, if I may, so this is, Mr. Bell, what we were talking about earlier.
Yes.
Yeah.
No, I understand. Thank you. Very helpful.
Another KPI that we look at is our cost per pupil. So the Virginia Department of Education defines what's an operational expense. And then I was showing you the first page of what's called our financial annual school report. That's the report that all school divisions report in a standardized format. This allows us to easily compare ourselves apples to apples to other school divisions. What's not included in the cost per pupil is cost of facilities, debt service, and capital outlay. And the reason for that is it wouldn't be fair to have 100% of that cost in 1 year, because the reality is we're going to see the value of it for multiple years. So as you can see in this graphic here, Frederick County continues to be lower than the state and the regional averages. We're even lower than Winchester City.
And lower than Shenandoah County.
Correct.
This is a great slide, thank you. Let's just let this sit here for a minute, or
This is
for
an awesome slide.
about 15 seconds, not a full minute. Let this sit here. I want folks to be able to see this at home. So I'm going to articulate a little bit on this slide further than what you have done, so just for emphasis. $15,501 for each Frederick County student on average, compared to the state average of $16,676. So less than the state average, and significantly less than Winchester City, and way less than Loudoun County. Very interesting.
And even the regional average.
Yeah.
$3,000 less than the regional average. per child.
That is fascinating, too, that Winchester City is nearing a Loudoun level of cost per pupil.
Yes.
That's why they weren't at our meeting.
Thank you.
Sure. And then here's just another way to look at our cost per pupil over the most recent years is we've broken it apart by the source of funds. So I want to draw your attention to FY23 and 24. Our cost per pupil has not significantly changed.
Can I just ask a quick question? With regards to the cost per pupil, and this is just, I'm sort of clarifying for everyone and also for myself. So the cost per pupil, that doesn't necessarily mean that every pupil is costing the school $15,501. Some pupils cost more than that. Some pupils cost less than that. So that would essentially be like an average, wouldn't it, for
It
per
is.
pupil?
This is the aggregate. Yes, it's an average.
Thank you. I appreciate that.
Mm-hmm.
That's all. I'm sorry.
All right, I'm going to turn it back over to Lisa.
Okay, so on this slide, you are just looking at some additional responsibilities of our finance team. We prepare and facilitate the independent audit of financial statements. Each year annually, we have an external audit. It involves all of the 4 areas that Kristen has highlighted. We have preliminary field work for 1 week from our individual auditors. Our external auditors 1 week in August, and then they return for a final week of field work in September. The next item is we coordinate risk management. Basically, this is our insurance, our county insurance. We coordinate the renewal process for VACORP, which is our insurance provider. We provide certificates of insurance to our schools when requested. We coordinate submitting claims for personal property, general liability, and also student accident. And we advise and support our administrators when they have questions involving risk management. And we also act as a point of contact for VACORP, our insurance provider. We provide additional training and support to our account managers in areas of fraud, business, and accounting of school board accounts, again, risk management, and any other questions that they may have. We act as their point of contact. And I think I'll turn the last part over to you. Thank you.
And then when we're finished managing the finances for Frederick County School, we're also serving as fiscal agent to the NREP program, as well as Bright Futures, and overseeing some student scholarships. So that concludes our presentation, unless you have any questions of us.
Thank you so very much for putting all of this together. It's very enlightening,
We hope that it's helpful.
definitely.
And this is a lot of work to put together this presentation. All the presentations that you all put together for us, I understand. It's a lot of work. I on occasion have to put together a few PowerPoints myself for my jobs, and it is a endeavor. So, and then to put the volume of work and the detail into something that's digestible in 1 hour-ish is very much appreciated. Thank you.
Yeah, Madam Chair, that's all we have. So
All
if you have
right.
any other questions, we're more than happy to answer them.
Sounds
Thank you.
great. Well, I look forward to meeting the other 2 team members. So it was very nice meeting you all too. I know you guys don't come to all the meetings, but thank you for coming and introducing yourselves to us so that we can put faces with names, especially when we're out and about and wandering around. We now know who is doing all the legwork and creating all of this behind the scenes. So thank you. Any other comments? Anything else? All right. We don't have any announcements yet, so we'll leave those for the main board meeting. And other than that, that concludes our agenda. How would the board like to proceed?
Madam Chair, I would like to make a motion to adjourn the Finance Committee meeting.
Second.
All right, we have a motion on the floor. It's been properly seconded. Any discussion? Seeing no discussion, all those in favor signify by saying aye.
Aye.
Aye. Any opposed? Motion passes. We're adjourned.